How's it going, everyone? This video is going to be over smart money techniques, or SMT. Correlated assets generally have the same structure. For example, when ES is making a lower low, YM or NQ should be making a lower low as well. When it's making a lower high as well, and so on. What happens when you get an SMT is when you get a divergence here. So instead of making a lower low right here, one of the assets makes a higher low, like that. This is where your SMT would be. So you have a lower low to a lower low, but a lower low to a higher low. So marking that out, it would look something like that. And this is an indication that there may be a reversal. The example I just showed would be a bullish SMT, since the SMT is occurring at the lows, and if indicating a possible reversal, that would be a bullish reversal. Now, for a bearish SMT, this SMT would occur at the highs because if it indicates a possible reversal, price would be moving down. So looking at this example here, you can see we put in a higher high on the S&P, but we also put in a higher high on the Dow. Now, we go in, we put in a lower low on the S&P, and we also put in a lower low on the Dow. Now here is where we get our divergence. As you notice, S&P puts in a lower high, while the Dow puts in a higher high. This is our divergence here as you see the structure diverge, right? S&P making a lower high, so not taking out this high, and Dow taking out this high. So removing all the structure, let's break this down pretty simply. We have a certain high we are watching. One asset does not break it. One asset does break it. That is our structure that aligns to give us our SMT. So a couple more examples of identifying an SMT before we hop into how I actually use them. We're looking at this structure right here. And if you notice, we have this low put in here. So we're watching this 2 a.m. low, as well as the 2 a.m. low here. Now, if you notice, NASDAQ is not breaking this low, while S&P is taking this low. So if NASDAQ is to not break this low, then we have an SMT, which could indicate that we want an upside move. So as we play this out, you can see that this SMT was the base for this expansion or this move upwards. The last few examples here, I have a blank chart. If you want to take a minute and look at the lows and highs, see if you see any possible SMT, feel free to do so before I begin. And the high we'll be looking at is right here. So if you notice, S&P takes this high, NASDAQ doesn't. This indicates a possible reversal in this area if it fits the other confluences. So letting this play out, so now I want you to look, is there any other high and low that we are reaching on one index versus the other that may indicate a possible reversal? Well, here's our obvious low. Here's our obvious low. So we have another SMT. And if I drew this one out, it would look something like this. So if we let this continue to play out, you can see we go and we hit our terminus. The last SMT I want to talk about are those within a fair value gap. So if you notice, we have this SMT at the highs from our previous example, and we get an aggressive move down. We have a fair value gap right here and right here. So if I draw those out, you can see the fair value gaps pretty clearly. So as we continue to play out price here, what do we have? We have an SMT within a fair value gap. So the S&P came up into this fair value gap, while NASDAQ does not. So if we let this play out a few more candles, you can see we reach for this low and then put in that SMT from the previous example. Now that we understand what SMTs look like and how to identify them, how do I actually utilize SMTs in my trading? I personally use SMTs as a confluence to an already existing model. So for example, when an SMT forms up here, I will look for a lower time frame entry model using that as a confluence. So before we get into this example, I just want to show you right here on NASDAQ, and just remember at 8:35, NASDAQ takes these lows or creates that SMT at the lows. We're going through this with the benefit of hindsight, but that will come into effect later on choosing price targets. So hopping into the S&P here and going down to a lower time frame. Here we have a 2-minute chart. A very early entry would be this deviation from the range, retesting that deviation, but waiting for some confirmation. We will let this play out. And we get an aggressive move down. You notice we have a SIBI right here or a VPR. So marking out this right here, we have an area of interest, or if we mark out the box setup, for those of you that have watched that video, that would be the entry as well. So somewhere in the middle of the SIBI or start of it, let's go with the start of it. With our stop at the highs, where do we target? Well, I want to be targeting some lows, so ideally those. So now let's watch this play out. We get tagged in, we come back up. This would be the box setup entry. So if we wanted to see that, it would look something like this, right? Now, if you remember, what I wanted to say was 8:35, NASDAQ took those lows, right? So right in here. So we'll watch until then. So ideally we are targeting those lows down here. But if you notice, this is when NASDAQ takes these lows down here, which creates an SMT. This indicates a possible reversal to the upside, and so sometimes I will use NASDAQ hitting price targets as my price target for ES and exiting the position in here. Now in regards to which of the index I trade when an SMT is presented, that is completely dependent on the lower time frames and which one looks cleaner to me. In this case, S&P looks cleaner to me. However, if I was getting later into this move down, NASDAQ looks a lot cleaner here. On the move back up, I would personally look to trade NASDAQ as it has low resistance liquidity above, but that is for another video. For our final example here, we will go back to the price action we were looking at the very beginning of this video, right here with this SMT between the S&P and Dow. So going into our lower time frames, this case the 1 minute, what do we have? We're just going to focus on the S&P here, so hop into that screen, and we are looking for a lower time frame entry model. So letting this play out, we break structure here and create a fair value gap here. This would be a possible first entry. However, if we let it play out, what do we have? Well, we have an order block right here, and that could be another entry, not expecting it to reach back up into here. And then we can target lows or wherever we are looking. And there we go. We hit our target, and that would be an example of how taking this SMT on the 15-minute and using a lower time frame entry model to frame a trade. I hope you enjoyed this video. If you did, please consider subscribing and liking. It does help me out, and I hope you have a great rest of your day. See ya.